But what you do have to have, whether you're an operator or you're looking for lending, your team needs to have net worth equal to a loan amount. You have to have money in the bank, about 10% of the loan amount. So you just can't go in using other people's money. The operators who are guaranteeing these loans have to have skin in the game.
Greetings, well builders. Welcome to Get Diversified, your go-to podcast for all things real estate investments.
I'm Jacqueline.
Melvin Landry. We're thrilled to embark on this wealth-building journey with you.
Imagine this. What if your investments not only secure your future, but also unlock a life of financial freedom? That's what we're diving into on this show. Apartment buildings, storage facilities, mobile home parks, the whole shebang.
But here's the kicker. It's not just about investing. It's about crafting a legacy, building memories with your loved ones, and seizing every moment. Time is the currency of life. And let's be real, none of us wants to waste.
We've got the insights, experience, and dash of excitement to spice up your investing game. Plus, we'll throw in some real-life stories that'll make you see the potential in every brick and mortar.
Subscribe, buckle up, and get ready to turn your investments into the ticket to financial freedom. Together, we're not just building wealth, we're building the community of savvy investors. Let's get diversified. Hello, folks, and welcome to another episode of Get Diversified. Today, we have a fantastic guest. This lady knows lending. This lady knows markets. This lady knows real estate. And today, I am really excited to have her drop some knowledge, some dimes for everyone to listen and talk about what's going on in the market, the good, the bad, and the stressful at times. But at any rate, I want to introduce Ms. Ann Peterson. Welcome to the show, madam. How we doing?
Oh, happy day to you. I'm doing well. You know, with everything that's happening in the market, we have to be joyful for, being alive, really. Sun's
Totally
shining, so that's good.
Yeah, totally understand, right? Things have been stressful, right? There have been good times and bad times. It's how you navigate at the end of the day.
Yeah.
How you handle it is one of the key performance indicators in this industry. Why don't we kickstart? Why don't you tell the listeners a little bit about you, where you're from, how you got into real estate, in terms of where you are at now in the lending world. So I'll let you have the floor.
Sounds great. Well, again, my name is Ann Peterson. I'm with Old Capital Lending, and I've been in real estate. I've been in banking since I was actually 14 years old. They didn't have the laws that they have today. So worked at a bank. I was a teller. I got to work all the way through high school into college as a banker. And I just love money. So I'm positioned correctly. What I do as a lender, we lend on all asset classes, but we really are specialists in multifamily. So that's your apartment buildings. That's 5 or more units. And I got started, my first property I bought I was at 22 years old. And, it was not a success story. Owned the property in Los Angeles. The Rodney King riots came, and my business that I was in at the time went down very quickly. Retail locations that I sold to were looted and shut down. And I had just bought a $250,000 home, and I called up a friend and I said, hey, I need to sell my house. It went from 250 to about 100,000 overnight. And a friend of mine says, hey, all I have is $4,000. And I said, I'll take it. I'm going to the Bay Area where I'm going to do what I do here in Los Angeles up there. So I packed up my house, left, basically my house. I lost, in one day, not only the value of my home, but also the money I put down, $80,000. So it was rough. So all to say, there are lots of peaks and valleys. There's lots of cycles that I've gone through. So I've seen it, played in it. My next property, I doubled my money. So, I went from 250 up to 550. So 600,000. So you've got wins and you have losses. It's just whether you can get through the hard times so you can make it through the good times. And that's where we are today. We had a lot of loss in our community. We do a lot of syndications in multifamily where we work in getting people to collaborate, put their money together and buy assets. And when you syndicate, you're taking other people's monies as limited partners
Yep.
and you're saying, hey, I'm going to return this capital. Well, a lot of people did not return capital. And so the big struggle now is to say, hey, knock on their door and say, hey, we're at the bottom of the cycle. We are ready to roll. Are you coming with us? And unfortunately, there's a lot of people with their hands in the pockets right now. So while I'm a lender, I'm also an owner operator. Even in my case, under contract with a 250 unit building in Atlanta area, we had a $15 million capital raise and we came up very, very short. So my team is extremely strong. We have a property management company that's my partner of 42 years. That should be enough to say, I know what I'm doing.
Yeah.
And a capital raiser who's capital raised $2 billion with family office. And we couldn't find the money. So it's real. What I'm talking about is real. I'm in the throes of this. Again, not as just a banker who wants to sell you a loan, but also as a owner operator. So the struggle is real right now, but we're at the bottom of the cycle. We're at the first inning, my friends. We are ready to batter up. You need to know what you're doing so that you're ready to swing and get moving in this next cycle.
Yeah, let's talk. You mentioned the notion of cycles, right? So, from your perspective, you're a lender, you're an operator, you know what good looks like, you know what bad looks like too. You think we're bottoming out now? I mean,
Yeah,
what's your
I
point of
think
view on
that,
that?
yeah. I think that there's more to come. It depends on the asset class and it depends on the location. So there's a lot of depends, and those aren't diapers in this. Although you may need diapers when you're in it, it does depend. So if you're in Austin, you're in Phoenix, it's not the bottom yet. And Atlanta
Mm,
may be there too. There's just been so much deliveries that have happened over the last 3 years that the absorption is there. They're starting to get, more and more
oh no,
absorbed, right? The
yeah,
deliveries have certainly slowed down, but I would tell you in those markets, even Dallas is still having absorption issues. And I think you're probably, depends on the market, you're 12 months to 24 months of it saying, okay, we've got rent growth, we've got deals are making sense. If you've got a lot of capital, it is an absolute wonderful time to be buying. These deals are, 2 years old, some of these brand new assets that have been delivered, and they're delivering at $170,000 a door. That's a loss for those operators who built that asset. So if you can find something like that, great, you got a deal. But are we at the bottom of C-class assets? Not in some of those bigger, better markets. I don't think so. We still have ICE showing up, right? People dropping their keys and saying, "I'm out." In fact, we had an operator that had 15 units in one day drop their keys and left. And overnight, these operators are having challenged and having to deal with what's happening with the occupancy. So again, the struggle is real. And again, but if you have a lot of money, there's a great deals out there. The big deals where they're going back to the banks, there's definitely some significant savings there. And that is where we say there's more to come. More to come.
talk about the big deals, right? You talk about there's still more blood to be in the street. There's still a little more heartache
Oh yeah.
and pain that's coming. Do you have concern from a macro standpoint? Right, you threw out some hard hidden markets: Austin, Phoenix, Atlanta, Houston. Right, another one. You mentioned Dallas, right? Which we thought Dallas to kind of weather the storm in many cases. It's a huge crisis, a lot of money, right?
A lot of money.
That's kind of being flowing. Uh,
Yeah.
Do you
I mean,
know?
there are groups that were getting listings, not listings, but the number of assets that they have turned back. 13 assets going back to the banks. 11 going back to the bank. Just their whole portfolio is closing up shop. Those guys are out of business. Yeah.
Here's a
And
question for you.
sure.
No, 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 no. Keep going, keep
Well,
going.
I
This
was
is
just going to say, people like you and I, and people that were limited partners. Remember, we as limited partners, we're in the back of the bus, we're in the back of the plane, right? We're going along for the ride thinking, hey,
right.
this is great. Come to find out, it isn't great. That operator is done paying, and you get an email saying, hey, I am turning this back in tomorrow. The bank is taking this, defaulting tomorrow. Wow, did we have any opportunity to make that better? Could we gotten on a different flight at this point?
Yeah,
No.
yeah.
So yeah, I think that again, if you've been in this space for a while, you went in as a limited partner in 2021, 22,
22.
23, those assets are in big trouble,
Yeah, no,
especially if
look,
they put bridge on it.
look, totally get it. I was
Yeah.
just a general partner on a deal in San Antonio. Put in 100K. I got a 5.5% total return with zero distribution. So it's a learning experience, right, to say the least. But I mean, it gets back right in terms of man. It seems like strong sponsors don't survive. Seem like from what
No.
you're telling me. Geez,
Yeah.
right? Wow, the debt, the capital stack matters. So at
It
the end of the
does.
day, yeah. So
If I'm talking to new investors or people that are thinking about getting into this space, the number one thing you should be asking is how many deals did you have in 2020? How many do you still own? How many did you have to return? Now listen, it's not necessarily operator that was in defaults. Obviously that happens to a certain extent. We don't like to see it, but because of the way the interest rates started out, they may have bought this asset. I know I bought an asset at 3%, and it went up to 9.5, 9.75 overnight. Nobody can survive this. I mean, even the best operators cannot weather that storm for a long, long, long time. And then we saw expenses go up. We saw occupancy drop. We saw the rate compression when we bought it, and now it's has really separated C's, B's, A's. So your value of these assets have completely lost. So I would be saying have those conversations with those operators early before you put any money in. Okay?
interesting.
You
That
couldn't have gotten out alive, quite frankly, without
got you. Yeah.
some, not default, but some difficulties.
No, totally, totally understand. I mean, I went gangbusters. I was kind of getting into the multifamily game 2021, 2022.
Sure.
And look, I've lost total capital on about 4 or 5 deals. So what our strategy is kind of flipped a little bit. I'm in the Western PA Pittsburgh market, and we're concentrating on which is a different dynamic, right? Versus your Class A in Dallas or Phoenix, right? So we buy old stuff, but it's steady Eddie, and rents are holding on for the most part. We target affordable housing,
Good.
which is
Yeah.
always a good opportunity. Um, Look, talk to me about understand on the operator side the pain and the heartache that has
Yeah.
experience. What's
Yeah.
those discussions are with when you're talking to the bank? That's what I'm interested to see and hear from you in terms of,
Yeah.
hey, you're a lender, right? And banks like we're taking it over. How are those
Yeah.
discussions going? Just curious.
Yeah, for sure. Well, these banks are obviously working, and they've been working with these operators for some time. These lenders, debt funds got into these deals back in 20 with a 3-year interest only. Then you could add another year for an extension, and you could go for another extension. So if you're in 2020, you're now at that end of the extension, and they're saying, I'm not going to extend you anymore. I need a capital infusion. I need you to put money into this deal, and we're not extending anymore. So we've been doing a lot of investigating. We've been running BOVs from the agency side. We've
Okay.
been running, how can we get you out of these deals? And most of the time, the bigger, the more impact, how much leverage they went in at, the worse it is. So a lot of these deals, the value has come down so far. The NOI has dropped significantly because, as we mentioned, the expenses ratio has changed significantly. And so these banks are saying, hey, can we sell it for you, or can you sell it? And they've tried. A lot of these sellers have tried to get the BOV. They've gotten it. We try to put it on the market. We can't sell it. Everybody wants a deal. So this is the new thing. It's going back to the bank. The bank is saying, okay, I'm going to try and figure this out. They don't want to be owners, operators.
Yeah,
So
they don't,
they're
yeah.
calling up their friends and saying, hey, you've done business with me. We have 4 or 5 deals. What about this one? And we are seeing some traction there. They're giving them what the loan amount is, and they've had some success. But here's where we're seeing it's going. Lenders are now going to need to discount that loan. We're seeing that, it's not worth it. You can't get buyers to buy it at the loan amount.
Wow.
And so we're seeing this really starting, and I mean, it's daily. We're getting these lenders saying, hey, give us an offer. Tell us what you're going to pay for it. So they're losing. The operators lost. The lender didn't want to lose, and now the lenders are losing. So it's all trickling down.
So there's an avalanche, and there's a marble going down the hill, and it's not stopping at all.
Yeah. And so I think this is the opportunity. Again, if you have money, this is the opportunity. If you're a small investor, it's hard to find it. So
I get it.
if you've got some good relationships with family office, you've got some billionaire friends, this is the time. There's great opportunity. You don't want to miss it at all.
Even on a smaller multifamily front, there's great opportunity. We're getting killer deals, even on
Good.
small multifamily, which is good, right? I mean,
It
wow.
is good. How's your capital raising? That would be where I see the challenge.
It is indeed a challenge. Big or small? Wow.
Yeah.
Let's say we have a listener, they're listening to this. They're thinking about trying to get started to have some capital, a little bit, not much. What
Yeah.
would you tell Julie? I mean, how would you advise them? What
Yeah.
would you tell them? They don't
Well,
have much, but they want to get in the game, and they know the market's right. Like, ooh, I maybe can get into something or partner with someone, an operator. What would you tell them?
I would say it's a great time to be getting into it with the money you have, knowing that it's not going to be day 1. It may not be day 30, and it may not be day 365 that you're going to see a return on your capital. But you're going to stay in this deal probably a little bit longer than what we saw in the past. We were seeing deals changing in 18 months.
Yeah.
Up to 3 years.
Yeah. 22, 23. Yeah. Yeah. Those days are over.
That's not, yeah. And those days are over. It's not the get rich quick, but there's always value in having hard assets. So that's number 1. It fits into your portfolio, finding a good operator and knowing that your distributions may be 2 years, 3 years down the road. Really need to change your expectation. And that's kind of where we're fighting with the stock market. The stock market is pretty strong right now, but it's not a hard asset. Oil and gas is amazing. It's really the only place I'm getting returns. But at the end of the day, I have properties that are hitting my tax returns that are advantageous. So depending on your criteria and your focus on, passive income, if you need it now, you might want to pause or change your thought process. Change your thought process to say it's a good asset, it's a good operator for months or longer for distributions. Change your
Yeah.
expectations.
Yeah. Okay. Okay. So look, I mean, how many units you're managing? I know you're doing lending, you're an operator.
Yeah.
You got
Yeah.
you got kids, you got a fuzzy fellow who I seen in the corner at the beginning of the show. How do you handle it all? Why don't you share with the list in terms of what are you managing right now?
Yeah. So I'm on the limited partner side and I'm on the active side. So on the active side, we've sold quite a few assets, because we got into them in 2020, 21, 22. So right now I probably have 1,300 units. And of those, I think I'm a general partner on 550 units.
Okay.
And we're trying to sell some of those or retain them because in this case, banks are saying, hey, we need to figure out what the next level of investment's going to be. Can we hold out for a little bit longer? And bullish on the occupancy going up. And when
Okay.
the occupancy goes up, we all can get over into agency. But there's a lot of people that, and even in ours, we're at 80, 85 occupancy. So we can't get out of those yet to get to agency. So we're holding on a little bit longer.
Okay. So for some of the listeners, Dave, you threw out the word agency. Won't you kind of share just a little insights going to agency from a traditional bank? What would that entail? The occupancy percentage? What are some other things that they look for when you want to? Because you said trying to get to agency is ideally a better case for
That's
you, right?
that is
So
it is. It's we call it the gold standard in lending. So you've heard of this in residential if you have any exposure to it, but you're hearing Fannie and Freddie. And Fannie and Freddie are government entities. They now own these lenders. So agency is non-recourse lending. So a lot of operators want to be able to kind of have a little bit more flexibility than personally signing on a loan. But let's face it, if you don't pay your bills, it's going to turn to recourse, right? So they're coming after
quick.
you one way or another. So agency financing, they start at $1 million loan amount. So it allows for some of the smaller operators to get into deals where you can take advantage of this non-recourse lending. But what you do have to have, whether you're an operator or you're looking for lending, your team needs to have net worth equal to a loan amount. You have to have money in the bank, about 10% of the loan amount.
Yep.
So you just can't go in using other people's money. The
Right.
operators who are guaranteeing these loans have to have skin in the game. And then you have to have experience. So if you're a new operator and trying to get to agency, you want to hook your truck to somebody who has the experience in using this type of lending. Otherwise, we're looking at bank financing, which is not a bad deal. You can go down into the $2, $3, $500,000 range, have an asset, get some good financing. You will personally guarantee those. And it is what it is, but it gets you in the door. And once you own for 2 years, you can get a step up into agency where you can then utilize that better type of lending.
You said hitch along for the ride when in need. So,
Yes. So Melvin,
well,
you're a sponsor? Are you somebody that's signed on the loans for 2 years?
I have not signed on the loan yet for 2
Okay.
years, but we are looking particularly, we have 100 doors in our Western PA market, and it's actually sporadic. So we're targeting all small multifamily in our particular market, and we're owner operators as well. and always looking to fine tune and continuously improve in that area, right? And we got 2 to 3 small local banks, that community banks, that we're locked in with. So,
Yeah. So
but as we
so
grow, right?
and that's
Yeah,
great. Yeah, and as you grow, you can then bring those up, right? I mean, all
yep,
you need is
it's
a 5-unit building and a loan amount of
$1 million.
$1 million. And then what that does is it gets it off of your balance sheet so then you can go buy more and more and more assets. Once you go to non-recourse, all they're looking at is your net worth and your liquidity. Where banks want to see a little bit more. They want to see tax returns. They
Yes.
want to see your statements. They want to see your resume. They want to see a little bit more what you got going on personally. So it's really great. Once you are ready, we'll get you into that agency financing and you can just expand your portfolio.
And here's another question from an owner operator who loves small multifamily. Can I take 4 or 5 units that are 2025, combine them together and go to agency? Can one person do that? Or it must be, right, to get to the over $1 million threshold.
Yes, so let's talk about that. Are you saying single family and get into an agency loan?
Oh, I'm
25
talking about,
single families?
no, small multifamily, not singles.
Okay, so are you saying when you say small multis, that's the 1 to 4 units?
Oh, no, 5, 10, 10 here, 12 there, 15 here. We
Got
get,
it.
say, 4 buildings, it's 50 units. It's over
Yes.
like $1 million. Could I come to
Yes.
you?
Yes. Here's the thing. They need to be contiguous, meaning in a row where you
Okay.
own them, or they can be a 5-mile radius.
Okay.
And then
Okay.
we can put it on one loan.
Good to know. And
Yeah.
see that for the
Yeah.
listeners,
Yeah.
occasional tip right there, because we're all Metro Pittsburgh, Allegheny County. So you got some that are kind of sporadic and everything's within a 20 to 30 mile minute drive, right? But that's good intel as someone who excels in the small multifamily space and looking to jump into the
Yeah.
agency front, which we're
Yeah.
pretty close.
And listen, if you have 10 single family doors and you've owned them for 2 years, okay, you then can qualify for agency financing. Remember, I said that you had to have experience in this in
Yes.
multifamily where you own, and if you don't have that experience, you use a sponsor. Well, and just this happened back in 2023, agencies said, hey, we're going to welcome in our single family folks. This is how it works. 10 units, you own 10 doors for 2 years. And maybe it took you 10 years to build that portfolio. You have to own all of them for 2 years. So the last one you would have to have bought in 2024
Yeah.
to
Yeah.
qualify in 26. And now you qualify for the agency 5 or more up to 50. I mean, it's amazing. When I was I got up to a 20-unit building by myself without with any investors. And the banks were saying, get lost. You don't have enough single family. And they didn't want single family at the time. Had I kept my portfolio along with the 20, I would have been in good shape and I would have been able to sponsor a deal. Signing on the loan, getting your 2 years underneath your belt, having a good relationship with the agencies will really help you build your business to help others. Yeah, to help others and be a sponsor on their deal. It's truly amazing.
And that's some great nuggets right there. Wow, in terms of navigating the waters, understanding things. But there's a caveat too. Even if you're small, you can
Yes.
still over time
Yeah.
qualify for agency debt. Wow.
Yeah.
Wow. Fantastic.
Yeah.
Wow.
I would tell
We've been
you,
well.
I would tell you, Melvin, that just in the last couple months, agency is, I wouldn't say they're turning away business, but the smaller deals are getting more and more challenging to do in agency. So 2 million, 3 million,
Yeah.
pretty good. Yeah. They are on the agency side. Yes. Because listen, they see it as new operators, the smaller deals. So if you have $1 million or sorry, let's say a 1.6 million that qualifies at 75% for agency, you want to
Okay.
make sure you have somebody that has a good experience, because the lenders are saying, hey, it's just so much work on a $1 million loan as opposed to a $20 million loan. I'm using the same people in my company and I'm making very little money on the small deals. While they'll do them, you just want to make sure that you have all of the people on your team that are really strong and say, hey, this is going to be a no-brainer. We are organized. We have everything we need, net worth, liquidity, experience, and we can charge it from there.
For someone that is looking, they could look to you at Old Capital to help out, to help them get to where they need to get to, right? So once we're at that stage,
Absolutely.
I'll come knocking on your door, right? So
Absolutely. And we're nationwide, which is great. We've closed over 8,000 loans. We're really specialists in this. You really you're putting hard money into these assets. You're putting $15,000 into an application. You want to have some execution certainty. Don't always look for the cheapest debt, because you could get burned and therefore you could lose your deposit. You could lose your deposit for your application. So look beyond that. Think about how am I going to get through this safely and not lose money? That is one of our mission statements. Nobody loses money.
Julie, this has been a fantastic podcast, sharing the ins, the out, the good and the bad, and just kind of what's going on in the marketplace. It's
Yeah,
rough waters right now, but
it is.
from an operational standpoint, you have to have the intel and the insights to be savvy to navigate through these waters. So even some of the best and some of the strongest are losing deals right now. So interesting. But for others, like you mentioned, if you have capital, it's an opportunity. So which is good.
It is. Really is. It is a great time.
Good, good. So, Julie, how can folks find you as we kind of wrap up and close things out? Let me let you kind of share your information, and we'll be sure to put it in the show notes as well. So, go ahead.
That's fantastic. So a couple things. I'm on all social medias. Julie Ann Peterson. Remember the E on the Ann, Julie Ann Peterson. So you'd find me on your LinkedIn, Facebook, Instagram. And then also really want to give a short pitch to Zoom at 8. Zoom at 8, Zoom at 8 p.m. Eastern every Tuesday night. Investors, operators, sponsors all show up and we meet other investors, other sponsors, and we also will bring in industry experts to show their product service. We just did an underwrite this week, so we really are getting the people who are there a little bit more educated and connected with other people in the business. So if you want, join us there, zoomat8.com, fill out the link there, and we'll send you how to connect every Tuesday night, 8 p.m. Eastern.
There you go. Zoom at 8. The more you know, the more you grow.
There you go. I love it.
And in this type of economy, in this environment now, being educated, minimizing mistakes where possible. And look, there's always going to be mistakes. It's how you adapt and being nimble drive success
Sure.
at the end of the day. So, yeah, for sure.
Amen. Yeah.
Well, Julie, this has been a fantastic podcast. I appreciate you sharing these nuggets of knowledge. Hopefully, the listeners have garnered something that they can take in their journey as they're thinking about it. I know there's a lot of folks got their hands in their pocket right now, but at the same time, there's opportunities out there. So,
Yeah.
Julie, on behalf of myself, my other half, Jacqueline, we want to thank you for being a part of the show, and we appreciate you fully.
Thank you so much.
Jacqueline and Melvin, thank you so much for taking time out of your busy day to listen to this episode of Get Diversified. Please make sure to subscribe to our podcast so you don't miss out on future episodes. Finally, stop by our website and follow us on social media. Ciao for now. Make it a great day, and we'll see you next time. And remember, get diversified.